Guys, will wait for a minute as some participants are still joining in. Good morning, everyone. Welcome to today's session of Pre-Bet with William O'Neill India. So, in this session, we'll take you through Nifty 50 chart placement along with its probable opening, some key global news and events, how US markets fed through the night, how Asian markets are trading at the moment, and at the end, everyone's favorite chart of the day for you. So, without taking your much time, let's start with Nifty 50 chart analysis. As we all know, uh, equity markets were closed yesterday. So, we'll be talking about Monday's close and how Nifty fared through Monday. So talking about the week, we started the week with Nifty in confirmed uptrend and the distribution day count at 1. On Monday as well, Nifty had a very good opening, had a muted opening, but after that continued to advance higher and made an advance around 0.7% higher for the day and closed above 17,500. If we talk about the accumulation in this part of Nifty 50 or in the last couple of weeks, you can see Nifty has been closing higher on higher volumes as well. And it's been retaking its key moving averages such as your 50 DMA, your 100 DMA, and your 200 DMA on above average volumes as well. So going forward, this 200 DMA, which is this black line, can act as good support for Nifty 50 going forward. Talking about the key resistance for Nifty 50, the previous high created by Nifty, such as around your 18,100 levels, your 18,300 levels, can act as some kind of resistance for Nifty going forward. The good part is that Nifty has been inching higher and is just around 5.8% of its height. And the more Nifty goes higher, the rally becomes highly sustainable as well. On the O'Neill front as well, if we talk about it, Nifty continues to remain in confirmed uptrend and the distribution day count is very low at 1. So overall, even on the distribution day front as well, there is hardly any pressure on the Nifty 50 or the market indices, both the Nifty 50 and the Sensex as well. So now, as the result season is going on, let's have a quick look at how some key results of yesterday. So talking about some key results, Natco Pharma released its results, Q1 FY23 results, and the revenue increased by 116.7%. EBITDA increased by 260% YOY. EBITDA margins expanded by 1,800 basis to 44.7%. PAT increased by 327% YOY. So the export sales of lenalidomide products to the USA was a major contributor to the top line and profitability of the business according to the management of the company. So it was a super set of numbers for Natco Pharma and can expect good gains or gap up opening in Natco Pharma as well for today. Talking about the other results, it was Tata Chem. So Tata Chem, the Q1 FY23 revenue increased by around 34.2%. EBITDA increased by 68.9%. EBITDA margins expanded 520 basis to 25.4%. And PAT increased by 86.3% YOY. Another good set of numbers. The others were ABB as Revenue increased 44.2% YOY. EBITDA increased 129% YOY. EBITDA margins expanded 360 basis points YOY to 9.7%, and PAT increased 99.6%. Uh, on the stake sale, the company approved the stake sale in the arm turbocharging industry for rupees 360 crores. Uh, so the grand on the other result was Granules. The Granules FY20 Q1 FY23 revenue increased by 20% YOY. EBITDA increased 5% YOY. EBITDA margins contracted 300 basis points YOY, and PAT increased 6.2% YOY. The key results that can be looked out for today are 3M India, Aarti Industries, Abbott India, ACE, All Cargo Logistics, CESC, Cummins India, Endurance Technology, Glenmark Pharmaceuticals, IRCTC, among others. Talking about the global market, the US market did remain a little subdued and on the negative side for yesterday. So the Dow Jones closed around 0.2% lower, S&P 500 by around 0.4% lower, Nasdaq by around 1.2% lower. So taking cues from the US peers, even Asian markets are trading lower at around 0.4%. Shanghai Composite by around 0.4%, Nikkei and Kospi around 0.8% respectively. So, talking about on the commodity front and the US Treasury yield front, the crude oil is trading at around $96 a barrel on Monday when we had session. Crude oil was trading at around 95 a barrel. But if we talk about yesterday's movement, it was kind of range bound for crude oil. Talking about US 10-year Treasury yield, it's trading around 2.785%, and the two-year 10-year is still inverted with 2 years at around 3.285. So if talking about the USD INR, it's hovering around 79.56. Talking about SGX Nifty, so the SGX Nifty at around 8:30 a.m. was indicating a muted opening. So the Nifty yesterday's closed around 17,525, and we're trading around 17,516, which is kind of a muted opening with a negative bias. So talking about the sector view, all major sectoral indices except your Nifty Energy, which is under pressure. All the other indices are in rally. So not just your Nifty 50 or the BSE index, even your broader market indices such as your mid cap 100, the small cap 100, all of them are in rally. The sectoral indices are in rally as well. All the sectoral indices, even the broader market indices, are trading above the 50 DMA. The ones that are the strongest phases at the moment is the Nifty Auto, which is trading around 15.1%, 15.01% above its 200 DMA. The FMCG sector, which is around 13.5% above its 200 DMA. Even banking sector has displayed good uh, then which is trading around 5.2% above his DMA, which is a really good sign. The IT sector is the only one which is at the moment kind of acting as a laggard, and it's trading around 10.6% over 10.6% below its 200 DMA, and even the D-Day count, so uh, 10.6% and the D-Day count. So this is a problem for the IT sector as the D-Day count is at 5, and even it's trading around 10.6% below its 200 DMA, which is not a good sign. So any further escalation in your D-Day count or any deterioration below, I mean, if it breaks the key moving averages, it won't be a good sign going forward. So now let's come to the chart of the day. So our chart of the day is solar industries. So before we talk about it, would like to give a small disclaimer that I mean it's not a buy or sell recommendation, and we'll be just discussing it for educational purpose. So the solar industry is the largest manufacturer of industrial explosive and explosive initiating systems in India. It has a capacity of around 3 lakh million tons per year. It has a reasonable market share in India of around 28%. Even the growth front on the recently released Q1 FY23 was good. It had the top line grew by around 95.8% YoY and 22.7% QoQ. However, as the raw material prices, ammonium nitrate prices were increasing, you could see EBITDA margins contracting, and EBITDA margins came at around 17.5% for the quarter, was around 21.2% for Q1 FY22 and 20% for Q4 FY22. The PAT also grew decently. So however, the management is still bullish on the future prospects, and the management is guiding, giving has given a growth guidance of around 30%, out of which 15 to 17% will be volume growth, and the rest will be value. So EBITDA margin going forward should be in the range of 20 to 20%. So I mean, when we were discussing the results, the Q4 FY22 margins was around 20%, and the Q1 FY22 margins around 21%. And this majorly because of the raw material escalation, you could see margin had gone below the 18% mark. So going forward, the management is confident to taking back that margin in the historical range of 22%. So yes, so in the coming quarters, they are mainly expecting relief in raw material prices as well. So the ammonium nitrate prices, which had increased 12% during the quarter, but they are expecting it to soften by in Q2 FY23 by around 15%. So going forward, government initiatives such as Housing for All, Gati Shakti, Atmanirbhar Bharat, and other different products are also expected to increase the company's revenue. Order book remains really robust at 3,850 crores, out of which 38 crores is from the defense sector. And the company on the capex front, the company spent around 84 crores for Q1 FY23, and they propose to spend around 400 to 500 crores in capex for FY23 as well. So overall, on the qualitative front, on the fundamental front, the company remains in superb shape, and that's why you can see uh, on the EPS front as well, can be reflected with a great EPS strength of 94. If you talk about the other parameters such as your price strength and your buyer demand, it remains really strong at 80, and buyer demand at A minus, which is really good. I mean, if you talk about the RS line as well, on the right hand side of the base, it really went higher on it and showed good accumulation as well. So when you look at the prices, don't just look at the prices, look at the price volume action as well. So if you see at it, I mean, the stock did went higher on really above average volume, so that was a really good price volume action for the stock. However, some kind of overhead supply did came in for yesterday's action, and the stock came down by around 1 to 2% on above average volumes, which is not a good sign. But fundamentally, good stocks do tend to break out or re-break out. So let's see how the stock gives, whether the stock is able to provide a breakout in the coming days or not. As the market is in confirmed uptrend, good stocks do tend to break out, and this stock can be a potential breakout candidate, and can be kept in one's buy watch list going forward. So, thank you guys, and do stay tuned to the space of Prevail with William O'Neill India as well, and do connect with us at 4:30 p.m. Every day for our after hour session as well, where we try to decode what happened during the day in the market, and along with that, some other key information such as your chart of the day, and how the global markets fared and how the sectors fared as well. So do connect in the after our session as well. We'll be keen to host you today as well at 4:30 p.m. Thank you.